Here we go. We just launched live. Let me click over to one of my other screens here so I can watch it on LinkedIn while we're doing it. Matt, thanks for joining. Hey, it was good to see you last week in frickin' Portland, man.
Yeah, thanks. It was good to see you. And I had never met your wife, and that was also an honor. So that was cool that you
That's
brought her over.
Yeah. She had a good time working from your office for the day. I told her she should have gone with Scott to frickin' lunch, but she's too shy to go do that kind of stuff. Okay, we're up and running, and let me just put something. All right, well, welcome to This Week in Lumber. It's going to be Matt Beamer from Hampton Lumber Sales, who, if you were listening, Matt and I was out in Oregon last week and got to stop in their office and visit with them and their team. And, man, you guys have a great setup out there now, Matt. It's a completely different office. I felt like I was really walking into really, it's really well put together. And, I mean, whoever designed that and laid it out, I'm sure you may have had some input into it. It flows really well.
You know, right before the pandemic hit in March of 2020, let's not forget, it was almost 2 years ago, you guys. Holy cow. It just seems like, that's a long time, really, if you think about it. But anyhow, right before that, Hampton had expanded our lease agreement with the landlord. It's a 3-story office building, and we occupied the entire second floor, both the east and west wings. And the third floor was occupied by a local college and like a Prudential office. And the other half of the third floor was empty. And Hampton wanted to expand, so they agreed to take over the entire third floor right before the pandemic shut everything down and we closed our offices. So that all this money that we agreed to spend on expanding, doubling our floor space, and they agreed to remodel the main office, which you were in. And so you saw the results of the remodel, but now there's like 6 people in the office. It's sad if you think about it.
It was crazy, and you had good coffee there. Well, it was good seeing you and Scott Gasho and one of your younger traders there. It was pretty cool. But yeah, it was a lot less people than when I was in there the last time. So we have somebody on. So Bill Gazier is on from Massachusetts. Dana is from Sioux Falls, South Dakota. And Chris is from Hong Kong. One thing I want to say is, so Scott was going down to that Oregon State game, right?
Yeah.
And man, oh man, I saw that third string quarterback from Utah kind of lit that whole thing up. And
I didn't watch the game, so I don't even know what happened. I just know they lost, unfortunately.
Yeah, well, Utah had a third string quarterback come in that nobody expected anything out. His first pass of his basic career was a 60-yard touchdown pass. and it was all history. It was all history from there. So crazy. So let's chat a little bit. So Greg is not on, but before he sent me a note, said make sure you and Matt talk about how basis works. And you and I had a good conversation about that multiple times. Like I know when the basis goes the other way, that's a lot of stress, risk to wear, but you always know why you're in it, right? I mean, and you have to defend that position sometimes, but in this case, it worked. Like, so right now we have basis wood coming onto our platform. As the basis went up, all of a sudden offers came on. Or we've got 10 trucks of 104 and 5/8 premium Doug Fir studs in Chicago that are moving all over with bids and asks right now because the guy lifted his basis on them, right? So
right.
You live in that world, man. What did you see over the last 2 months with that?
Well, when the market first started to rip, let's say a month ago, just for simplicity, that initial move in pricing and availability was really like this. It was really steep. There's a lot of velocity to it, and it was also it was very sudden and decisive. And so the futures market, if you watched it for, I think 11 days, it averaged over limit up. It went up like $330 in 11 trading sessions. If you were short the board hedging your inventory as a basis trade, you really had to be cognizant of the velocity and and the change of direction and how quickly it was occurring, you had to protect your basis by setting aside that inventory that you had hedged and just don't deal with it. Just leave it alone, and then let the dust settle. And then the dust finally settled where cash followed, came up, and then futures finally came down a little bit. We made a high of like 11 something last week. We've made a new low today of 972. So, that's your basis coming together. That's your convergence. That's where the cash price and the futures price starts to make some sense. And at that point, you can lift your hedges and you can sell your cash. But if you try to do it, like if you try to outthink the market and outsmart it, let's say you took your hedges off, let's say you sold your cash and made a $250 1,000 margin on it, but then you were slow to get out of your basis trade hedges and lost $400 on the, you would have lost $150 1,000. It would have just crushed you. So if you're going to basis trade wood, you have to be patient. That's the bottom line, I guess, is what I'm getting.
Yeah, there's no question about it, and really, you had to wear a lot of that move up, but while you're in it, right? So I just think that's cool. And sometimes people don't understand why there's inventory sitting in places, but it's not moving yet, right? Now you see the ability to move that around. Let's talk a little bit about you all. I also had a conversation. We had some good conversations, as we always do when we get together. About we had that market in 2018, right? That made its first all-time high. I'm going to guess around 650 on a CME basis. Rolled over, then came ripping back, and everybody just loaded the boat on that second move up and was wrong and lifted their hedges, and it took some people years to recover from that. Hell, some people lost their jobs.
Yep.
And that's how it works. And that kind of goes to your point of why people manage volatility with futures, et cetera, and why they stay in them even when they think they're wrong sometimes, right? Because a market like that will test you on basis. And what I saw in 2018 is companies that I thought were pretty smart lifting basis and going the Texas hedge double long, right?
Yeah.
And it happens. And I've done that before, right? And but I've done it in a market where you have a complete $135 move on a year basis, not in a day. Right? And so this is a little different this time because, again, you and I were talking, when you have moves of $135 1,000, which were historically, if you take out 2021, what the yearly moves were, that tests a person's mettle, right? And it makes people wonder what to do. So it goes to the next question. I'm going through social media this morning, looking at Twitter, Facebook, if that's even relevant anymore, and LinkedIn, and looking at the lumber people, what they're talking about. All of a sudden, guys that 2 months ago were telling people not to buy are telling people they should load the boat for the first quarter. And their reasoning makes sense. But I think we've already made a pretty good move, right? The reasoning is we haven't seen demand in the Southeast or the South or the Northeast lighten up yet. And we think it's just going to continue like this, which is pretty true. It's been moving pretty good, Matt. But on the flip side of that, and a lot of the problems that we have seen are starting to mitigate themselves. There's still logistical problems, but we're working through that. But a lot of the stuff we had out of BC with the non-shipping and all that, that's starting to come back around, starting to remedy itself. And I think production is fairly decent right now, right? And I think you and Greg talked last week. Is fourth quarter the lowest cost production quarter, lowest volume production?
Lowest volume, yeah.
Yeah. So we have people accumulating in the lowest volume quarter, and that's why prices are running. And I think they're building inventory, and they're building it in the pipeline now, whether it's at their yards or not. So what's your feeling on the market? I always love your analogy. What inning are we in right now? I think we were in the sixth inning when we talked last week with you.
I mean, I think we're still in the sixth or seventh inning. I don't think this market has completed its cycle yet, but it feels like, the initial surge and panic, I guess, if you want to use that word, that was going on from, say, Thanksgiving to a few weeks, like say a week ago, maybe a week and a half ago, that's kind of died down. If you look at the futures market, as a guide, let's just look at the price action in futures the last 10 days. It ran up $330 in 11 days, and then it only moved about $30 last week, in 5 trading days. So you can see the futures market has sort of ran out of energy also once it got up around 1100. And, it just tells me it's taking a pause. It's going through a digestion phase, which is where I think we are right now in the cash market. I think there's some cash out there that's now coming loose because of the basis trade coming in. So you're going to see some regional distributors and national distributors that do trade like that. They'll let some product out to the market.
But with the volume that's traded in the CME, although there is some, it's a drop in the bucket compared to what the daily and weekly production is, right?
Yeah, but it's also a guideline. So I mean, people look at it as a directional indicator, I suppose, if they want to. If that's all you ever use futures for, great, But it does show you, like, I look at momentum, I look at velocity. I think those are important concepts in lumber, and so when you lose momentum and you lose velocity, that generally means you're cresting. You're running out of buyers. You're seeing more sellers come to the market, and you're running out of eager buyers. And eventually, the sellers will outnumber the buyers. Right now, in this market that we're in, knowing that we've had 2 major runs in the last 8 months, we had a huge run in April, May, June that sputtered out until August. Then we've been rallying since August, right? And this last run, we just moved $500 in a month. That's a fast and significant change of direction. We've had 2 of them in the same year. And I think we're going to have more of them. I think all the consolidation in lumber on both the producing side and the customer side is creating less diversity of opinion about what to do when lumber changes pace. So when lumber's going down, everybody's going to be on the same page. Don't buy, don't buy, don't buy. When lumber's going up, everybody's going to be on the same page. Buy, 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 buy. Guess why? They're all owned by the same people. Yeah. So you have these smaller offices doing more purchasing for more yards.
Yeah,
and they answer to the same people, right? I mean, so you're talking about 5 companies owning all the sawmills and 5 companies owning all the retail yards, and there you go, boom, boom, boom. Now, in 2022, we're going to see Home Depot enter the fray. They're going to throw a bunch of money at the contractor business. I mean, things have the potential to be really, really good in the first and second quarter. Once again, there's going to be plenty of buyers out there. The builders want to keep it going. I mean, there's plenty of demand, untapped demand. We can't catch up with demand when it comes to building, right? We've talked about this on our show. We have the potential for 2 million housing starts, but we're sort of capped at 1.5, maybe 1.6.
Look at we were almost building 2 million or 1.9 in 2004 or 5.
I mean, you and I have been in the business for almost 30 years, and I think the high point was 2.2 million housing starts, or maybe it was 2.0.
That sounds about right. Yeah.
We've been there in our careers. But we can't get there. We just can't. There's just not enough workers or not enough material. There's just not enough infrastructure in place right now in America for us to harvest 2 million housing starts.
I think that's ultimately where you run into the real question. As production does ramp up in the South, I saw another Southern Pine Mill announced again last week, and production ramps up. Can production catch up faster than people can consume it and put it into product, right? Into houses, multifamily, and all that kind of stuff. That's one of the real questions, because Economics 101 tells me this. If you are getting 10x the cost of production on a commodity item, regardless of what people say, you figure out how to make more said product. Period. End of story.
Right.
And I think, the problem is finding the people to build the mills too, right? That's a building process, right?
I think the biggest problem, there's 2 major problems that are going to kind of cap production in North America. One is the actual log itself. And the South, they have better access to the log than we do in the Northwest, or even the Canadians in British Columbia, where they've been, think about it, for the last 20 years, they've lost millions and millions of trees due to bugs, right? Beetle
Right.
kill. So I don't think that Oregon, Washington, Idaho, California, Montana, and British Columbia are going to find more logs all of a sudden. I really don't. I think we're just sort of stuck with what we have, and we're just going to we'll add shifts here and there if we can, but it's hard to hire people nationally for anything. I mean, if you look at Hampton's jobs available, get on Hampton's website, go look at how many jobs are available for Hampton. You want to be an HR person, or you want to be a knife sharpener at the mill. I mean, there's plenty of job postings for Hampton right now. I'm sure we're not alone. And then logs aren't exactly easy to come by either, because, there's the people that own the forest. They have options too. They don't have to sell their logs to Hampton. They can not harvest if they want to see the price go up. And they see the price of lumber, going to 4 digits here. They're probably questioning, why do we want to sell our logs for the old price? So I don't think production is going to increase from this half of the country or this half of the hemisphere, really. It would come from Eastern Canada. It would come from yellow pine, most likely. And then probably at these prices, you'd see a little bit more lumber being sent this way from Brazil and Europe, I'd imagine.
So let's talk about that. European, had some guys saying we have still had a pretty good chunk of euro on here, and there's more makes sense. There's more coming in. We again probably are the highest returning place for them in the world, right?
I have euro coming for the first time since August, September, so I can speak to that. I mean, if I have finally got some new wood coming in, then I'm sure everybody else does too. I don't think I'm alone there.
Right.
And I see the Europeans would be very attracted to $1,100-$1,200 lumber, which is way higher than anyone else is going to pay in the world, right? I think we're far and away paying more than any other region on Earth right now. So I would be shocked if they don't keep sending more. The only thing that would slow them down would be COVID restrictions, people not being able to work at the docks or unload ships or things like that, which is a possibility, I guess. Are we going to go back to like severe lockdowns and all this stuff, or are people just sort of getting tired of the 2 years of being stuck at home? That's my big question for 2022. When's the pandemic officially end? I think that's going to have a big bearing on how the business goes, really, to tell you the truth.
There's no doubt about it. Let me go down my checklist here. So we talked about the outflow. Where is the wood in the pipeline now? So people have been buying, and what I noticed yesterday, you and I talked about some cars, and here's the conversation I have with the guy. I can do that car for you for the 3rd week in January or the last week of January shipment. And the guy goes, I love the price, but I need it shipped in 2 weeks or sooner.
Yeah.
And he goes, I would do your price if you could do trucks or 2 weeks or sooner, right? And so I'm like, okay, so what am I reading into that? That they need the wood that quickly, or they don't want to have it speculatively bought that far out?
I think both. I mean, okay. I think yes is the answer to that question. It can be both. There's the way I view the market right now is there's still severe demand for quick wood. At the same time, if I try to go out and sell my customers on lumber that's going to ship in 3 or 4 weeks, that means it's not really going to arrive until at the earliest mid-February. You're talking March lumber, right? And we're not, as an industry, very good at that. Looking and considering buying lumber that far out unless we're desperate and we have no other options. Well, they have other options, because some of this basis wood that you and I were talking about at the beginning of this call is showing up. So these guys don't have to buy 4-week out lumber at the moment. They can pay a little bit more, get a handful of trucks to come in the next 2 weeks, and that sort of buys them some time to make a more clear-headed decision after the new year. We're also in the holiday. We're firmly in holiday mode right now, buddy. So, half the people that you would be talking to on a normal basis are not even in the office. Or if they are in the office, they're not really paying much attention to what lumber's doing because they got other things to do. Like they forgot to buy their presents for their wife and they're going to run out of the office here in 5 minutes. And you know what I mean? They're distracted. So yeah, I think that there's pushback on the idea of buying lumber for 3 or 4 weeks out because they don't have to. They can actually buy some lumber for more money and get it quicker. And they'd rather do that.
Gotcha. So I just saw somebody up here just put, I need to purchase an entire lumber package for a new hotel, and send his email up here. So we'll contact you to see if we can do that. I was just watching one of the live markets here. He wants my email. So I'm posting the live markets up here. Somebody's moving their 9-footers around in Chicago. So if somebody's trying to sell 9s, Doug for 104 and 5/8 9s, they started out at $1,200 this morning, dropped their offer down to $1,157 for prompt 9s. Print on that is $1,200. So that item is worth $1,300 to Chicago on a print basis, right? And I have people now bidding $15 away. The seller just lowered their offer to $1,157. So it's kind of cool watching this bid and offer go between this. And this is what we talked about, why people would use our platform. It's because you can watch live markets moving around in a digital format. It's pretty cool.
What would it cost to truck that down to Dallas?
Well, let's see here.
$70, something like that.
I can find. Are you interested in going to Dallas on that one?
Well, for comparative purposes, we have sold.
So Dallas is about. I'll ask Nick. Nick is listening to me. Nick, let me know what it would be. My freight over there to Dallas.
I'm just going to guess it's $70, $80, and based on 1157 FOB the mill, at $80, that's 1237 Texas. We've already sold for almost $200 1,000 higher than that in Texas on trucks.
Exactly. That's why.
Well, yeah, that guy should just get hammered with orders right now, right? I mean, there's got to be somebody paying attention. If you're the guy that's countering him $15 more, you might want to just go ahead and pay his price. As soon as I get off this conference call with Ashley, those trucks are going to be gone.
There's no doubt about that. The thing is, you got to be on the platform to see this. So one of the interesting things, Matt, is about the platform is what I like to do in this call is we keep talking like this, but eventually we'll start running the live bids and offers for some people on the right-hand side so we can see what the market's doing live while we're doing it, and eventually start putting the trades together live while we're doing this. Matt Lehman said receivables becomes a concern for contractor yards due to delayed completions, caution poking its head out. I think, yeah, man, whenever you get up to prices when 9-foot studs were $500 1,000 a month and a half ago, 2 months ago, and now they're at $1,200, receivables for sure become a concern, right? Because you're almost 3xing your accounts receivables in some cases, right?
Well, we figured out how to manage that risk last year, and I'm sure we'll figure out how to manage that risk again. I don't think the guy's framing, I don't think that the contractor and the guy that's got the apartment job and the guy that's going to build the hotel, the developer types, I don't think they're going to support lumber at $1,200, $1,300, $1,400, $1,500 unless they absolutely have to, kicking and screaming. I don't think they're going to drive the market. They didn't drive the market last year when we reached those record high prices. You know who drove the market back then was home centers, retail yards, right?
And are they doing that still? I haven't seen as much takeout.
You know who's driving the market right now? Home centers, retail yards. It's the same as it was last year. So, I don't – the contractor and the framer, they are going to just go along for the ride as long as they can, as long as it's profitable. And then when it's not profitable anymore, they're going to back away. They're going to wait for a better time to come back in. They have time. Since it's so hard for them to procure people and materials also, they can sit back for 6 months and just decide, okay, this is crazy. Let's just cool it for a little bit. Let's focus on completing the other projects we've already started. So we've seen that occur already. We'll see it again. At the same time, the home centers are building inventory for springtime, which starts officially sometime in March. And they'll be joined by large retail companies that have commitments to builders. And the builders are going to go, 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 go. The builders, the national builders and all the big regional builders, they got to get those starts in the ground. That they're going to go. So I see a market that is performing about what I expect. I mean, the velocity changes are quicker and the volatility is more than what we've ever been used to. But the fundamental reasons for what we're seeing are pretty obvious. It's, hey, there's some big entities moving around their chips on the board, and they're going to do it no matter what. Even if the price is $1,200, they're going to still do it.
I was going to bring a picture up and show you, Matt. Well, so I think we've kind of summed up where we think the market's going volatile. I think we're later in the innings of the game. There's still people looking for prompt stuff. Yesterday, as the futures sold off, there were still people looking for prompt loads of stuff everywhere, right? So that still has not changed. So that's going to be pretty important. One thing I want to show you is this, and see if you can see it. Well, that's first of all, that's me landing at the airport in Seattle.
Yeah, how'd you pull that one off, dude?
Dude, I just asked the pilot if I could get a picture of my materials exchange shirt, and he gave me his hat. I look like a little kid. My wife thought
must have slipped him a 20 or something. Hey, buddy.
My wife thought I was crazy, but I want to show you this picture. So when I went and saw you, I traveled through Oregon and started heading down that road.
That's Santiam Pass. Yeah.
Yeah. So I kind of went into that town of Detroit that had that terrible fire through it, but they were logging the dry dug fir and hem fir. Probably not as much after you kind of educated me. The hem fir is kind of done because that fire was 2 years ago, right? But that Doug fir, there were some nice loads of Doug fir coming through there.
Yeah. No, it's Doug fir. Doug fir after a fire is good for a couple years. Ponderosa pine and hemlock is only good for about 1 year, and then it gets infested with bugs, and the fiber itself becomes kind of mushy. So, if they're going to salvage log a burn area, they want to do it ideally like right away. It's the best way to get in there. You can peel off the outer layer that's burned, and you still have good fiber underneath and viable logs there. But if it sits for more than 2 years, it just becomes, compost, basically.
The other thing I was going to ask you, I was walking through my sister-in-law's subdivision, and I saw a new house going up, and then all over I saw bunks of this laying all over Bend, Oregon, and other places. Frank lumber?
Yeah, Frank.
Never heard.
There's a little mill up there in Detroit that you drove through.
Man, I saw a ton of that Frank lumber sitting all over the place.
Yeah, they make high-end Doug fir. They're a small little local Oregon mill, and I think most of their business is done in Oregon. There used to be 500 mills like that in Oregon, Ashley. Now there's about 20 left.
Well, I heard Oregon to Oregon business is tough now because your government decided if you do business from Oregon to Oregon, it's an extra 0.5% now, or a percentage. Isn't that crazy?
I don't know, man. I mean, Oregon's an expensive place to live, period. It's still not quite as expensive as California, but we're working on it.
Oh, man, look, dude, I really enjoyed Oregon. It was beautiful through Santiam Pass, and then we came back, as you said, through Mount Hood, and we stopped at the place you took me to dinner 7 years ago called Ringside, and my wife absolutely loved it. So it was pretty cool. But look at
you enjoyed yourself.
I appreciate it. I'm going to get back to it. It looks like about 1,400, 1,100 delivered to Texas on those 9-foot trucks. So that's about where it is. Stimpro, Stimpro stock.
Yeah.
So yeah, ready to roll. So anyway, hopefully people enjoyed our new way where I kind of stream prices along the side and talk to it. Matt, I appreciate it. We missed Greg. We'll update him. He can watch the rerun of it. Thanks everybody from showing up from Hong Kong to Spain to South Carolina, North Carolina, Illinois. I think we're getting a pretty good following. Appreciate it. And we'll look forward to, we'll have to figure out, we're going to be in the holidays next week. So we're going to have to figure out if we're going to do that one or not Wednesday.
I will probably be working, but we'll just talk off air about it. I mean, but yeah, I theoretically, I have no reason not to do it. I can just do it on my laptop like I'm doing today, pretty much wherever I am. So it's up to you and Greg, but I can do it for sure. I'm not going anywhere.
Sounds good, Matt. Thanks a lot. We'll look forward. Thanks everybody for showing up.
Yeah. Thanks everybody. Merry Christmas.
Merry Christmas to everybody too.
See you, buddy.